How long have you been investing? Are you new to the markets or are you a seasoned investor? Let me know in the comments below. In this video, we're going to be talking about how to invest money and how to get started in the stock market. Let's get into the podcast. What's up, guys? It's your boy Ty, and I appreciate you guys coming to check me out on the podcast. Wherever you're catching this at, be that YouTube, Spotify, wherever, I'm all over the board. I appreciate you being here and taking time out your day to tune in to my money talks. I like to talk about money and finance and things of that nature because I do believe that having conversations about money, having conversations about finance and building wealth can actually benefit people. The more you talk about something and the more you do something, you get better at it. So I do believe that is also true when it comes to talking about finances and investing. A lot of times people don't talk about investing and finances, not out loud, not enough. And that's why I'm having these money talks. It's not to give you financial advice because I'm not a financial advisor. It's mainly to actually stimulate your mind and make sure that we are having these conversations so we too can improve. Again, I'm not a financial advisor. If you need financial advice, make sure you seek out a financial advisor. I'm just here to maybe inspire you to look at a few things like that, and share with you guys my journey. Because I'm investing in the markets, I'm doing new things, and I'm on my way to building wealth. And I want to talk about it. I want to be able to talk about it. So I know you are on the same journey, right? Are you on the journey to build wealth? Is that something that interests you? If so, you have joined the right community. We can talk about it. I'm all about talking about it. Drop something in the comments, and of course I respond back. So again, today we're here to talk about how to invest money. And before we get into that, make sure if you guys need stock picks or want a little guidance with your stock picks and your investments, check out the Motley Fool. The Motley Fool is a stock advisor who, they are very decorated and they have been killing it. And I'm pretty sure you guys know who the Motley Fool is. You probably see their ads pop up everywhere. And it's because they are one of the number one stock advisors out. So check out the Motley Fool. I use the Motley Fool to help with my investing so I can know what's hot, what's the hottest stocks out there and markets that I should be looking into. I use the Motley Fool for that. And my research is very detailed and tailored research for, people that do subscribe to the Motley Fool. So make sure you guys check that out in the description of this video and in the comment section. And again, I do believe the Motley Fool is definitely a helpful resource. I know a lot of times people are against stock advisors and, people like to say that maybe you should just do your own research. That's fine. I'm going to do my own research, but I also would like to know what the researchers are saying too, especially for people that are new to the markets. If you want to have a little more reassurance in your investments, places like the Motley Fool and advisors like the Motley Fool, because at the end of the day, they are giving you advice on stocks and they are recommending stock picks, but they are in the business of recommending the correct stock picks. So you get advice from, your buddy or just some random person. They can tell you whatever and keep it moving. Someone that is an actual stock advisor and they recommend stocks, it behooves them to make sure they recommend you the best stocks possible. So again, make sure you guys check out the Motley Fool in the comments below. That's a great place to start and a great tool. I want you to use it as a tool. If you do sign up with the Motley Fool and check them out, it's a tool to do research. And when you're talking about stocks, a lot of times people are putting a lot of money into stocks. People are putting thousands on thousands on thousands of dollars in the stock market. So why wouldn't you spend not even $100? The Motley Fool right now is $89 to sign up for your first membership. Why wouldn't you spend $89 to make sure that you are picking the perfect or the best stock possible, best stocks possible? It's just $89, about $100, and of course, after that first year, it goes to $200, $199. But again, if you're putting thousands in the stock market, like most people are, and like I do myself, I want to make sure that I got the best possible information out there. So, yeah, I'm sorry, y'all, but make sure you check out the Motley Food. It's in the comments and in the description. Now, let's get back to the topic. Today, we're going to be talking about how to invest money. And I'm also using an article by the Motley Fool as my resource. So a lot of times, you guys know, I'm not going to get up here and act like I'm the god of stocks or anything like that. I'm going to keep it 100% real with you. So I'm using my resource is an article by the Motley Fool. And the article is titled How to Invest Money, Getting Started with Investing. So that's going to be, I'm going to be using snippets from that article, and that too is in the description. I should have it in the resource section in the description. But again, the Motley Fool is a nice spot. They not only give you stock picks, but they also want to make sure that their customers and consumers understand stocks. So they make sure they put educational pieces out for the consumers. You guys know, if you're on my YouTube channel, you guys see the Motley Fool all the time. So, how to invest money. First of all. All right, before we talk about investing into the stock market, stocks are, up and down. Right now, the market is up and down, and you can lose money in stocks. So don't think that you're just gonna put money somewhere and you blink and you're gonna be in profit right away, or you be making money like in the blink of an eye. It don't really work like that. Sometimes you can put money into a stock and it goes down the next day, and it could go down for weeks, for months, and then finally it comes back up. If you pick good stocks and you are confident in your stocks that you pick, you will be all right. But I just want to put that out there, that disclaimer that, people are sometimes confused about the stock market, that you can instantly gain money from the stock market. Stock market is a vehicle to build upon wealth. All right. So, of course, vehicle got to travel down the road a little bit. You got to stick with it before it ain't no get money quick scheme. I mean, a lot of people chase those penny stocks, but be wary of those. So I just want you guys to know, especially if you are a new investor and you're a beginner in investing. If you're a beginner, I just want you to know that. So know a little bit about the market. But if you already understand that, first I like to say congratulations. You are here to invest, and it's all about building wealth. Like I said, the stock market is a vehicle that you can use to build wealth. It's not a get rich quick scheme. It's a vehicle to use to build wealth, and is a nice place to gain returns on your money. And of course, you have to have money to make money. So again, before we dive into it, if you are new to investing and you are pinching pennies, right? Make sure that you understand that for you to get the most benefit out of the stock market, you have to leave your money in these stocks. So if you're pinching pennies and you're gonna have that itch to take your money out, you might want to wait and build up your funds before you go and try to invest. If you really are pinching pennies, you're gonna be more likely to pull your money out when things go wrong. More likely to pull your money out as soon as you see a little bit of profit, because you need that money. So if you really want to make long-term growth with the stock market, you need to be able to leave your money in there for a minute, or even if you trading in and out, You still want to be able to leave your money on the market so you can use your money to get into different trades and back and forth if you are a day trader or something like that. But regardless, the stock market isn't the place for put your money here, pull it out of the account. Put your money here, pull it out of the account. Most people will know that. But again, if you're here, make sure you understand all of that. But let's keep it going. So again, congratulations for coming to build wealth. The only thing about the stock market that, again, we have to be wary of, the stock market is there is no one size fit all. So it's a whole bunch of different styles in investing and trading. I was just talking about day trading. You can be a day trader, and that requires a lot of work and research, or you can be a simple long-term investor, position trader as they call it, and that's what I would call myself. I put my money into long-term investments that I think will grow for the long term. And everyone, again, is no one size fit all, so everyone has to have their own set goal. Some people have a year goal. They want to increase their money or double their money, or increase whatever they have over the next year. Some people want to invest for 10 years and see what type of investment return on investment they would get after 10 years. So again, everyone has different styles, everyone has a different budget, and everyone has a different risk level. So those are the three things that we are really going to talk about when we talk about getting started with investing. So you should know your style, you should know your budget, and you should know your risk tolerance level. Before you put any money in, you need to make sure you understand what's these things before you start putting your money in the stock market, because you could be ready to invest and things could go opposite of what you thought it was going to go. It could not go your way. Things could not go your way because you didn't put your money where it should have been, that suited your needs and personality. So yeah. So first off, we're going to talk about your style. And when it comes to your style, a lot of things come into play with that. How much time do you want to put in investing your money? All right. So if you want to, just put your money in, research a couple good companies and things like that, you might be a long-term passive investor. Like myself, I feel like I'm passive. I put my money in certain stocks, and I just increase my position in those stocks because I think that they are valuable stocks. I think that they will give me decent returns off dividends and things like that. So my style is more passive. And I know that because I don't want to be having to check on the stock daily. I don't want to have to check on the stock weekly. That can be kind of stressful, and that can also require you to do a lot of research in your homework, So I do my research a couple times on whatever company that I want. I make sure they're making money. I make sure their revenue is good. I make sure that whatever that company does or sells, it makes sense, that common sense investing, because I like to keep investing simple. I'm a simple investor, and that's what I really like to promote. Common sense investing and simple investing. It's not hard to pick winners. You're talking about companies like Microsoft, Apple. It's not hard to see those companies, right? And just future technologies. Certain things make sense to me, and I use common sense to invest. So those things make me a passive investor. So I'm a little biased on investing because I am a passive investor. On the other side, if you want to, dive really deep into stocks and you want to potentially get your money faster, because passive is, slower. Passive is slower, is a fact, because you're investing into these valuable companies, and so is everyone else. Everyone knows it's valuable. That's why, everybody's investing into them, right? but it's a little more slow. You're talking about a company that might grow over the next year 30-40%, 30-40% yearly. That's great growth for real. If you want, that's great growth. After 5 years, you're gonna more than double your money, and that's a great return. But if you want your money quicker, you might want to be an active trader, and that's what my day traders are. My day traders are making money off of those the stocks shoot up 10%, 20% in a day. Move it to somewhere else, it shoot up 30%. Take profits, then move somewhere else. Now those people are making money and is pretty good, but you have to actually be doing your research. You have to make sure you understand the charts. You got to understand price action, and you got to make sure you moving your money when you hit those take profits. That's a lot more work and research involved into that type of trading or investing. So it all depends on you. So that's why I go back to your style. What do you want to do with your stock market portfolio, or with your investing into the stock market or trading in the stock market? That all depends on your style. So that's passive and active. And of course, with both, you have to have knowledge on investments, and you have to be able to research your stocks. But it's just how much research do you want to do? Do you want to do research on a daily basis? Be active, make that quick money, or passive and slow roll it, and you can make that passive income. So it's all about what you desire. Many people want simple investing and want to get it right the first time. So a lot of people go to the passive style because it's a proven fact that over time passive wins, because when people are doing active, sometimes it's so many mistakes that can be made when you're doing that active day trading in and out. And you have to have a strategy. You have to have a set strategy to do that active trading. But you can win. I'm not shining a negative light on active trading, because a lot of people make money off active trading. But just realize that if that's what you want to do, be a day trader, it's a lot of work and time and research that you're going to have to dedicate to investing. Passive, people just, slow roll it. So it's all about what you want, how much time you got, how much do you want to spend when you're investing. All right, so recap. Passive investing is more for simplicity, more stable, and more predictable. It's a hands-off approach. You can get moderate returns and tax advantages, because the longer you hold a stock, you don't have to pay taxes on it unless you're selling that stock. So let's say my stock price increased. I bought a stock, and let's say I held it all year and I didn't sell it, and that stock went up 100%. I'm not paying taxes on it until I sell the stock. Once I sell the stock, I'm paying taxes. So somebody that's an active trader, they're paying taxes on each sale. So that's why it's really important how much of a percentage they get off of each trade. All right. And then we talk about active investing. It's more work, more risk, but more potential for reward. Like I said, you can make bank off active trading if you have a legit strategy and you have a strategy that works. You can make bank off active trading. All right. So you're gonna have to do the investing yourself, or you have to have a portfolio manager for active trading. You have to do lots of research, and the potential returns could be huge and life changing with active investing. So again, active investing is a way to change your life, right? It could be life changing, those quick returns. So it sounds enticing, but again, it's more work, more risk. So it all depends on what you want. And next up, your budget. All right, so your budget is very important. is how much money do you have to invest? You know, you can begin with $100. You can begin with $1,000. You can begin with $20 a week. You know, but it's important to make sure, as I said before, you know, you have enough money that you're not going to be pulling from your investments. So one of the tips that they give in this article is one important step to take before investing is to set up an emergency fund. So emergency fund is that fund that you use when time gets hard. When times are hard, what money do you pull from? You just got a flat tire, you need 4 new tires, or how you gonna get them? You gonna swipe that card? I mean, you can't always swipe that card, right? They love putting that extra interest on you. Or you can pull from your emergency fund, get your tires, and then place your money. Or, you know, if you put all your money into the stock market and you didn't start an emergency fund, guess what you're gonna pull from? You really need the money. You're gonna take it out from your investments, and you could potentially miss out on some decent returns because you know, the stock market can go up and down at any moment. So you can pull all your money out. Then next thing you know, that stock that you was waiting on, it could skyrocket as soon as you pull it out. So your entry price will never be the same. You see what I'm saying? So it's good to make sure that you got an emergency fund. So that's a great tip. Great tip to have that emergency fund so you don't be tempted to pull out your money from the stocks. Because, I mean, shoot, it's life. Stuff happens and you need the money, right? But you could be missing out on your returns when you do that. All right. And third, the last thing, again, we was talking about your risk tolerance level. How much financial risk are you willing to take? That's what it boils down to, because the stock market can be very volatile. You can put money into a stock today, and then you can put $100 in today, and then by next week, $100 could turn to $50. What you gonna do? You gonna be mad, or you gonna put another 100 in? You know, stock market can be volatile, so it all depends on what you're willing to lose. If you're not willing to take risks and lose anything, man, you might want to stay away from the stock market, because it can get real. But if you are someone that don't want to take a lot of risks, you need to know that, because it's going to impact your investing. Prime example, a blue chip stock like Apple. We talk about Apple, Microsoft, all those stocks. Those are stocks that are pretty much, you know, good companies. We know that they make good products. They keep a good customer base. They keep making new innovations and products. It's kind of no brainer. Apple is, you know, going to be around. I don't think Apple is going to disappear tomorrow or the next day. But a penny stock compared to a blue chip stock like Apple is very, very, very different. It's very different. So a penny stock, of course, we're talking about that high reward, high risk. It could be life changing if it shoot up, but most penny stocks, at least my experience, most penny stocks could burn you. You can burn. You can put $1,000 into a penny stock, and then next thing you know, you get burnt down to $200. I'm telling you, it can happen. But if you aren't used to making risks and you can't afford those risks, it's something you need to know before you even start investing. All right. And lastly, so it's good to know your risk tolerance level. Let's make sure we know that. Like I said, it can be the difference in what you invest and making sure you get what you desire from the stock market, because you can get burnt if you're not investing the right way. Lastly, what should you invest your money in? Of course, everybody wants to know that, right? Everybody wants someone to tell them the hottest stock picks and things like that. That's why you should use somebody like the Motley Fool, a stock advisor that, you know, is paying researchers to do this stock analyst to analyze stocks and do this stock research and give it out to the people. It's a team behind that. is a team, and they are working towards making sure their clients have the best stock picks and the best information out there. So make sure you check out the Motley Food. They can probably help you out if you're trying to find out what you want to invest in, or you can do your research yourself. Of course, you can do that. I'm not against doing your own research, but for new people, if you want extra help, you could always sign up with a stock advisor, or, most brokerages have help guided investing. I know a lot of my brokerages accounts, they have guided investing. So you could get help, or you can do the research yourself and understand the stock market and understand how these markets move. Because unfortunately, there isn't a perfect answer to what's the hottest stock. As I just said, is risk level involved? What you willing to risk? What are you looking for? What type of return you're looking for? How long do you want to keep your money in the stock market? Do you want to just earn dividends off your stocks? It's a lot that goes into what's the best investment. So the best type of investment depends on your investment goals. I love it. That's how they had the exact same thing I was saying. That's why I can tell you guys what I'm investing into, but I'm never really going to tell you guys to go buy it. I'm going to say this isn't financial advice, because everybody's goal is different. You can invest into a dividend stock that I really like, or a dividend stock that I like, and I'm holding it for dividends, but you could have invested into that dividend company thinking that it was a growth stock. So when the price trickles down, you're going to be mad. Like, what the world? You said it was a good stock. It's a good stock for me because I'm using it for dividends. If you was trying to get growth off of it, what you want me to do? You see what I'm saying? So make sure you understand your investment goals. So these are all things that you should know before you invest in the stock market, or things you should think about. Have a little plan. I tell you like this, when I first started investing, no lie, when I first started investing, I was going to invest in Robinhood. I started investing. I put a couple of dollars in Robinhood, and you guys can check Robinhood out in the links in the description too. I put a little bit of dollars in Robinhood, and I tested it out. I was like, okay, I understand. Now I'm ready to drop some big money in there. But before I put the big money in there, because I felt like I understood how the stocks move, I invested into some ETFs too. But before I put the big money in there, I took, if let's say you about to put $1,000 before, or you about to put some 10,000, whatever you about to put in there, I already knew which stocks I wanted to buy because I made a portfolio before I even just put it up there, and I already had goals on my portfolio, what I wanted my portfolio to do, how long I was going to invest in my portfolio, what type of stocks I wanted in my portfolio, how was I going to make my portfolio not volatile, because I too, at the time, I didn't want any risk because I was new to the stock market. I'm like, man, I ain't trying to be risking everything with individual stocks, things like that. But now I know a little different, so I'm okay with taking some risks. But it all depends on what you want. So make sure you have your investment goals set out before you invest into the stock market. It can make a world of difference. So I appreciate you guys sticking with me with the money talks. Again, the more we talk about investing, the more we can grow. And some of these tips in this video, make sure you share the video if you found it useful. Share the podcast. I still got plenty more to talk about. But if someone ever asks you how to invest, I would say, man, you got to make sure you know what you want. I've been saying that. That's one of the biggest things, because no one should be following someone's advice just to follow someone's advice. They should make sure that they know what they want and their goals line up with whatever they're doing in the markets. So yeah, again, sharing knowledge is, making sure we big up each other. Make sure you guys share this knowledge. I appreciate y'all checking me out. Make sure you come back because I always got plenty to talk about. Peace.